Hey traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for December 5th, 2021. Hope you guys are having a great weekend. We actually have a lot to talk about because we had the non-farm payroll actually on Friday. A lot of you guys and gals tuned in. You probably heard my reaction. We're probably wondering how I handled that. So we're going to talk a little bit about that and actually what I'm doing now post non-farm payroll. And I'm going to take you over to that here in just one second, but a couple housekeeping things. First and foremost, if you guys haven't checked out tradersummit.net, check it out. It's a great place to really start your trading day. You can actually go see some of the most recent articles here. A lot of great ideas right at the beginning of the day. So when you start your trading day, if you want to get caught up on the markets, it's a great place to do so. Like I always read Boris and Kathy's, piece in the morning, or Mark Chandler. So go check that out. Also, if you haven't tried out ForexAnalytix, you should do so right now. Now, let me stop and tell you why. You guys know we're coming into the beginning of the year. We always run a New Year's special. What happens when we do a New Year's special is we give you a significant discount that's only available a couple of times a year, right? And one of those times is going to be around January 1st, right around then. We remove the ability to try ForexAnalytix. You just get a discounted rate. Okay. Now it's great because you get this like huge discount and people wait for it all year long. But if you really want to try it out, do it right now. You're in the month of December. It's only $1 for 10 days. Try it out. And then, you can go, oh man, here goes that special in January. I really want to take advantage of it. That's the way I would play it. If I were you, that's how I'd play it. If you want to talk trades. But when you do that, make sure you download the mobile app, because you get the mobile app no matter if you're with the premium version or with the light version. Okay. For the next 10 days, make sure you listen to all of the private webinars that we do for all the ForexAnalytix subscribers. And if you decide, hey, I don't want to, the chat room, like that's in the premium version, I don't really need the advanced analysis. Fine, the light version is $19 a month. Just stick with that. But you get the app and all the basic analysis, all the live webinars. So make sure you take advantage of it. Okay, enough of the housekeeping stuff. And don't forget to check out, by the way, the desktop platform so you can see all the little nuggets that you get, like the data flash here, the live squawk, the news flow, the calendar, your risk management tools, which by the way, I use all the time, all of our patterns in play. You can see, how we trade around the markets throughout the course of the, while the markets are moving, obviously. So a lot of good stuff here. Okay. Let's go into, I'm going to talk a little bit about crypto really quick because this is one of the real risks of crypto. It's a very illiquid market, and when things move, a lot of times I'm not even sure why why things move. But last night in the middle of the night, Bitcoin just actually took out all these stops. I knew Ethereum. There was an ETF that wasn't getting launched, and then Ethereum just got completely wrecked. We broke 4,000, triggered stops all the way to 3,400 or 34 and change. Bitcoin, took stops to 41,000. I mean, if you think about that, I just want you guys to think about this from a I'm an investor standpoint, right? And let's just talk where we were at right around 57,000, and then we took a drop to 42,000, right? That is a 26% loss. Now, I know you guys are like, well, that was just one day in Bitcoin. I mean, but if you invested 100 grand and you look at your account at one point, you're like down 25 grand of it. I mean, that's a big number. And for those of you that are trading Bitcoin, maybe you bought Bitcoin and you put a stop 15% below the market, you're like, it's never going to trigger to that. And then boom, that happens. You have to be really, really careful. Don't forget that it's a relatively new asset class, and you've got everybody and their mother's brother's uncle trying to sell it to you. So just, be careful. Know where where you need to get out. And hopefully, these unregulated brokers that you're using, hopefully they can get you out. in time, and hopefully, you don't get hurt too bad in situations like that. But that was ugly. That's an ugly move. Okay, I needed to just talk about it because if I didn't, I'd feel silly that I didn't talk about this exaggerated move that we saw in a very illiquid time of the market when no one was looking. All right, let's and by the way, I'm not going to be looking through the analysis of ForexAnalytix right now because it is being updated as we speak. Some of the analysis is getting updated right now, but a lot of the analysis has not. On the basic technical analysis, it gets done throughout the weekend. So I'm going to just go to live analysis. So let's first and foremost, let's talk about the Canadian because, or actually, you know what? Let me take a step back. I'm going to come back to the Canadian. Some of you may want to know how the heck I responded to non-farm payroll. So non-farm payroll came out and the dollar strengthened, even though it was a weak number. Now, even though it was a weak number, the internals were very strong. And then people saw a weak number as, well, that's going to be bullish for stocks because the Fed won't aggressively taper. But as most of you know, that listen to me every day, I don't think anything with the jobs report is really going to affect the Fed and how they're going to taper. I don't think that's it. I think they're more focused on inflation. I think the jobs picture is pretty good, even though that we did end up losing or creating way less jobs than we thought. Some of the other data was good behind it. Anyway, we saw the dollar really strengthen. After it was weakening at first, it just turned around and started strengthening. Now, what we saw is the Aussie dollar slip to below 70 cents. I picked it up following the jobs report. So, right after the jobs report here, I bought the Aussie as it dropped down towards 70 cents. And then after I got off the webinar, it started to wobble a little bit. And I said, you know what? I'm going to get out of it because I still think we're going to go to 70 cents. So I actually exited that and then it dropped. But at the same time, what I did is I actually bought the dollar Canadian because the dollar Canadian was at channel support. And, if you guys were not on the Morning Edge webinar, then you probably didn't see that. And if you weren't in the chat room, you didn't know that. But in the chat rooms, I was like, okay, I'm taking my loss on the Aussie, a little 10 pip loss. I think I took 12 pip loss on the euro or something like that. And then I turned around and bought the dollar Canadian down at the lows. I also bought the dollar Mexican peso down here at the 2120 level, I think, because you can see this trend line coming through here. Because I figured the dollar was going to pick up steam. Anyway, so then at the end of the day, after I got out of those, took some profits on both of those, the Canadian and the dollar Mex. I turned around and I bought some Aussie dollars around 70 cents and I started getting long. Now, if you guys don't know why, this is a trade that I've actually had set up for a very long time. When I say I've had set up, if you've listened to the week ahead videos, and I can't reference exactly which number of them that I've talked about over the last few months or any of the daily webinars, I can't tell you how many times over the course of the last 6 months, I've said, hey, I think the Aussie's going to 70 cents. But when we get there, I'm going to be a buyer. The reason why is because it's a 38% retracement of the post-COVID lockdown lows to the highs. 38% retracement comes in at 70.50. It's also a breakout point from over here back in December 2019. I've always said I think this is a generational low that we saw back in March of 2020. I don't think we're going to get anywhere near that over the next 20 years. So I think that this is what I like to reference as a generational low. Now, it was also a V bottom low. And so anywhere between 60 or 70 cents and maybe we might get down to 68 cents, which, by the way, it's possible because, you look at where stocks are at right now. We could drop down there, but I am willing to take a tactical long here for a bounce because the daily sentiment index came in at 10, which is a very, very low number. That's extreme bearishness right now. And so the boat's a little tipped towards the bears at the moment. And that means that, too many people it's like a clown car, you got too many people in the car and they all fall out, so you got too many people bearish, too much bearish sentiment. It tends to revert back to the mean a little bit. So I do think that the Aussie is going to be bouncing into next week. Now, how far are we going to go? It's questionable. For the first target on any bounce would be back up to 71 cents. But to be frank here, especially if we get a rally in equities at year end, we could really push back up towards 75 cents or the 200-day moving average. I've always believed that inflation is it's sticky. It's going to be here. And inflationary pressures are going to persist. And it's going to be these inflation or these commodity currencies that are actually going to do better probably over the coming years. So is this the low in the Aussie dollar near term? Not sure. Is this a place where the Aussie dollar is probably going to find a foothold over the course of the next month or two, somewhere around this 68 to 70 cent level? I do believe so. And I believe that you can have a tactical bounce here, even if we go down below 70 cents to 68 cents in the months ahead. I still think these levels are levels you want to be long the Aussie for a long term. It is bearish though right now. We had a bearish breakdown, the 127% extension of the last move higher. That would be the August low to the highs around October. Also come in around 69.70, which were really 69.86 actually. We're really close to. So I wouldn't be surprised if we see that maybe a little bit lower at the open on Sunday. But I don't know if I'd really want to be short down here. Not right now. Not after this big of a move. And most of you know, just keeping on the theme of the Aussie, I was very bearish in the Aussie up here. And I don't think a lot of you guys were, we had a pattern in play going on at the channel top, 200-day moving average. I was actually getting quite bearish and shorting the Aussie up at those levels and trading it on the short side for the last few weeks. But I do think it's a little overdone here. Now, a couple other things I do want to talk about before I let you go. And by the way, as we're talking, I need to mention, if you don't come to the free daily F.A.C.E webinar, it's free every day. Well, every trading day. Just go to ForexAnalytix.com. Go here where it says register now to attend for a free webinar, right? It is a Zoom meeting. We do it every morning. Not just me, it's the rest of the team as well. Come log in and listen. This way you can get my updated views and the rest of the team's updated views throughout the course of the week. And we do it every day. Been doing it every day for the last 5 years here. And even before that, I did the morning edge for the retail trader probably 12, 14 years before that. So continue to listen in. It's a great resource for you. All right. So one of the other things that I wanted to talk about today is the euro dollar. So the euro, as most of you know, we pivoted off a really strong level of support around the 112.50 level. Now, the reason why that was such a big support, that was a multi-year trend line. I figured it was going to bounce there. I started buying the euro when on that dip down towards 112.50, and then played it on the long side. Now the euro, I think, is sideways. Okay, it is sideways, and is range bound. You can see this little triangle setting up. I think a break below 112.50. We're going to revisit 112, or a break above the 113.75, which is the 38% retracement. Whoops, not that. The 38% retracement of the last leg lower. If we break above that, we should revisit 115. For those of you that are looking for longs, counter trend, I think that's the way we're going. I think we're going to be bouncing back towards 115. If I had to guess, we do have some important stuff coming up this next week that can influence the Aussie, and it can influence the euro and the Canadian, which I'm going to talk about here in a second. So really quick, talking about the Aussie dollar, we talked about this really strong support. Don't forget the RBA rate decision is Monday night, Tuesday morning. So Tuesday morning, if you're in Australia or in Asia, Monday night, if you're in, US or in Europe. The reason why I'm mentioning that is because there is a risk that you're going to start to see some profit taking on any shorts ahead of the RBA. Now, they're not the only central bank meeting this week. The other central bank meeting this week is the Bank of Canada. I did play this on the long side on Friday, as I just mentioned to you. I bought it at 127.70, which is really close to that 618. Actually, I think I bought it at 127.78 or 77, somewhere around there, if I remember correctly. Anyway, you can see that channel support, 618 retracement. This channel is very important. Now, we are above this trend line here, and we're nearing 129.50, which is a huge breakdown point, huge previous support. It acted as it acted as resistance back in August. If we get up there, you better believe that's going to be pretty big resistance. Can we get up there? Sure. Especially if crude oil weakens and the dollar strengthens. Boy, across the board, you could actually see the dollar Canadian race up there. Also with the Bank of Canada, if the Bank of Canada is not as hawkish as the market is expecting, you could see the dollar Canadian race up there. Now, the reason why I mention that is because I think the Bank of Canada will probably, even though they're not expected to move on rates, they are expected to be a little bit more hawkish so they can normalize rates again. And because of that, we might see some volatility. Is it possible that the Canadian breaks, the dollar Canadian breaks lower, the Canadian dollar breaks higher? Absolutely, especially if you break below this channel support. So right now, going into midweek, I would say probably realistically by midweek, if we haven't broken back below 127.75, that's going to end up being channel support. Like, let's just forget this trend line for a second. Let me delete that. Okay, so sorry, glasses. If that trend line right there breaks down, then I would say that the Canadian dollar is strengthening. It probably is as a result of the Bank of Canada on Wednesday. But keep in mind, this channel seems really strong. And Friday, it proved how respectable it is, right? So that if you match up all the highs of the most recent highs over the last few weeks, then you just take this line right here, right, and just put it across the bottom. That's the channel low. So and keeping in mind, we hit it on Friday and respected it, bounced like a bat out of hell. So you know that's important. So really by the time we get back down there, it'd be around 127.70, 127.75. If that breaks, then I don't know if I'd want to be long the loonie anymore or short the Canadian dollar or long Canadian, if you want to think of it like that. Now, there's one last piece of data that's coming out at the end of the week, and that is going to be the CPI data out of the U.S. There is the the German ZEW numbers that can move the euro early in the week, but really at the end of the week, we have CPI data. You guys know that everybody's watching inflation right now. You, my mother, my mother's grandmother, my mother's grandmother, and her uncle's monkey is also watching inflation. Everybody is watching inflation. So you gotta focus on the CPI data. Now you might argue and say, well, Blake, that's really not the most important inflation data gauge to the Fed. And I don't think that's the one we should be watching. It doesn't matter. Well, first of all, it doesn't matter what you think, because it doesn't matter what I think either. It doesn't matter what we think. It's what the market thinks. But I'd say the CPI data, even though it's not the most important data to the Fed, I think the market is still reacting on the data. And as traders, that's all we care about, right? We just care about. I'm not going to debate which is better, which is worse, what we should pay attention to more. I just know the market's going to be paying attention to the CPI data. So as long as the market's paying attention to the CPI data, I have to pay attention to the CPI data. It's the same argument where you say, well, Blake, I don't trust Chinese data. So what do you ignore it? No, we pay attention to it, even though we all think it's bogus. The market's still trading off of it. We still have to trade off the CPI data. And that is on Friday, December 10th. So make sure that you are paying attention to it, because like I said, whether you don't care about it or, whatever, the market's really going to be focused on it. So therefore, we should all be paying attention to it as well, right? Until the market finds something else to ADHD. Squirrel! I'm joking. Hope you guys found that funny. For those of you that have kids and you've ever watched the movie Up, you might have found it funny. If you don't have kids and you've never seen the movie Up, you probably didn't find it funny. Anyway, I hope you found this entertaining. If you did, make sure you give us a like. That means thumbs up. Subscribe to the channel because it's free, so you don't miss any of this content. And I'll see you on the Monday morning F.A.C.E webinar. You guys and gals have a wonderful remainder of your weekend. I'll talk to you soon. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.